Why are Tesla's numbers in China surging despite market noise? Welcome back, fellow investors. I hope you're enjoying your weekend. In this video, we have a lot to dive into, with a particular focus on Tesla's performance in China and some intriguing developments in the EV market worldwide. But before we get started, I want to ask you, everyday Americans, for your insights. What's your take on the state of the EV industry and the demand for electric vehicles? Leave your comments below every 5 paragraphs, and let's engage in this discussion together. Let's kick things off with China. You'll be surprised to learn that in the first 9 months of this year, Tesla's Model Y is the best-selling car in China out of a staggering 675 different models. That's a remarkable feat, especially considering the competitive landscape in China's automotive market. Year-to-date, the following 5 brands ahead of Tesla, Nissan, Audi, Mercedes, and BMW, are growing at a much slower pace or even shrinking compared to last year. They've increased sales by only around 3 to 5%. In contrast, Wuling is down a whopping 177%. Furthermore, the deliveries of the Model 3 Highlander have officially started, which is fantastic news for Tesla. While Model Y dominated Tesla sales in China recently, with the Model 3 Highlander now hitting the market, it's safe to assume that the Model 3 will regain its spot in the top 10 best-selling vehicles soon. For the Model S and Model X, Tesla imported 642 of those models to China in September, which is consistent with August numbers. Additionally, there was a price hike for the Model Y in China, with the Model Y Performance variant seeing an increase of approximately $1,900. But it's interesting to note that when prices go up, it doesn't receive as much attention as when they drop. In terms of production, the weekly insured numbers for China stood at 8,100 for the week ending October 16, 2022. While this is an improvement from previous weeks, it's not quite at the level it was during Q3. The bulk of these cars are Model YS, but with the Model 3 Highlander deliveries commencing soon, we can expect an uptick in the coming weeks. So, despite the current negative sentiments surrounding the car industry and EVs, Tesla seems to be holding its ground quite well in China. Now, let's shift our focus to the United States. Year-to-date, from January to September, Tesla stands as the fastest-growing car group, with an impressive 41% increase in sales. It's a significant accomplishment, especially in a market known for its stiff competition. Other notable players include Nissan, Mitsubishi, American Honda, Hyundai, Kia, Ford, Toyota, and GM. Of course, Tesla still has a long way to go to become an industry leader, but it's off to a solid start. In the United States, there was also a minor price hike for the Model Y long range, with a price increase of around $500. This adjustment will likely necessitate updates to analysts' EPS estimates, illustrating the market sensitivity to changes in Tesla's pricing. Now, let's delve into the global picture of electric vehicle, EV, demand and Legacy Auto's response to it. Brian Sullivan from CNBC made an interesting observation when he said, "Car companies are waking up to the fact that most buyers don't want an EV, they want a Tesla." This perspective challenges the prevailing narrative that EVs are the future of the automotive industry. Legacy auto companies, such as GM, Mercedes, and Ford, have been candid about the challenges they're facing with EV demand. Jim Farley, Ford's CEO, admitted that the EV market is indeed a challenging space. He emphasized that a great product is no longer sufficient, cost competitiveness is essential, echoing Elon Musk's long-standing focus on cost control. In a similar vein, Mary Barra, the CEO of General Motors, stated that they are reducing fixed costs by $2 billion as they aim to exit 2024. GM is also moderating the acceleration of EV production in North America to align with the slower near-term growth in demand and improve engineering efficiency. This shift underscores the importance of cost-effectiveness in the EV market. Mercedes-Benz echoed this sentiment, with its CEO acknowledging the brutal competition in the EV space and expressing doubts about the sustainability of the current status quo for all players. These statements collectively emphasize the reality that simply having a great product isn't enough to succeed in the evolving automotive landscape. Cost efficiency is a pivotal factor. In an ironic twist, Ford's Jim Farley acknowledged that Tesla has provided a blueprint for success by maintaining a laser focus on cost and scaling the Model Y. Other automakers are now making strides in developing their second and third cycle EVs, with Tesla's approach as a reference point. General Motors has faced challenges beyond EVs, particularly in its Cruise subsidiary, which focuses on driverless technology. Cruise recently announced a proactive pause in driverless operations across all fleets to examine their processes, systems, and tools to regain public trust. This decision comes amid concerns about the accuracy of their self-driving reports submitted to the DMV. It's a clear indicator of the high stakes and scrutiny involved in the autonomous driving industry. In Europe, Tesla shared some positive news. The Model Y broke a sales record in Denmark, a record that had been held since 2013. This achievement challenges the notion that there's no demand for EVs in Europe. In terms of European car sales by brand, Tesla's performance is also commendable. While it's still a relatively small player in the European market, it's the fastest-growing brand compared to last year. With the possibility of moving up a few places in Q4, Tesla's progress in Europe is noteworthy. For those skeptical about the EV market, BP's announcement provides some food for thought. BP plans to invest up to $1 billion in EV charging across the United States by 2030, starting with a $100 million order of Tesla ultra-fast chargers. This partnership signals that traditional energy companies are recognizing the importance of EV infrastructure and is a testament to Tesla's influence in this space. Now, let's address the elephant in the room: the recent market volatility. The past 2 weeks have been tough for tech companies and the stock market as a whole, with multiple factors such as weak earnings, high inflation, geopolitical issues, and more contributing to the challenging environment. However, it's essential to remember that these trying times often present the best investment opportunities. If you're in it for the long term, these turbulent moments can be when good opportunities emerge. Before we wrap up, I'd like to hear your thoughts. What's your take on the state of the EV industry and the demand for electric vehicles? Leave your comments below, and let's keep the conversation going. In conclusion, while the EV market is undoubtedly evolving, there are challenges and opportunities for both legacy automakers and disruptors like Tesla. The road ahead is filled with uncertainty, but one thing is clear: the automotive industry is in the midst of a transformation, and the landscape is continually shifting. Couch Investor, signing off. See you in the next one.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.